Welcome to all the students and all the participants. As Sorry said, we're living in quite a difficult time now with COVID-19, so please be safe out there and please exercise extreme care when traveling, when visiting. Just to introduce myself, as Sorry said, my name is Ro Harrington. I'm primarily a tutor at CPUT. I also lecture as well as other colleges in terms of supply chain management. I also facilitate project management, and I also lecture on finance for non-financial managers. And in terms of my career, I worked at various manufacturing companies. My last company I worked for was basically in Gauteng, working for a large multinational company. And there I was basically head of supply management. I also worked in Germany for a number of years as head of procurement for a certain division. I was also responsible for the Chinese subsidiary. As you know, China is a growing market. Currently, they the largest manufacturer of vehicles. They also basically in the forefront of EVs, which is electric vehicles. So China is a growing market, and in a few years' time, China will be the largest country in terms of gross domestic product. So why am I saying this? Because as a procurement manager, you need to know exactly what type of markets you operate in, how to do a market analysis with your marketing manager, and you also need to be aware of technology to enable you to be a successful procurement manager. What I discovered is in my career is that as a procurement manager, you have to engage with your colleagues, with your superiors, and with your staff, and also collaboration is a key. Also, based on the agenda, we've got a 3.5 hour session. So the plan is we're gonna complete chapter 1 from 9 o'clock to 10 o'clock. We'll have a break for 10 minutes. Thereafter, we continue with chapter 2, and then we'll engage with the different activities. 11 o'clock, we'll have a break, and then from 10 past 11 to 12 o'clock, we'll finalize chapter 3, and then at 12 o'clock, we will have questions and answers. However, we do have a chat box and a Q&A. So if you do have any questions in Q&A, we'll basically come back to you in terms of all the questions. So just to make sure, I assume that everybody can hear me.
Yes, we can hear you, Louis.
Okay, that's fine. Okay, so guys, this session it's quite important. What I've got here is I've made some key points here. I said a dream written down with a date becomes a goal. A goal broken down into steps become a plan. A plan backed by action becomes a reality. This has been my motto for all the years. Um, I had dreams. One of my dreams was go to Germany, and what's important is you basically have to write your dream down, and then you need to make sure that you basically have an action plan to make sure it becomes a reality. And my dream of Germany became a reality. As I said previously, I worked in Germany for a number of years, and it was quite excellent to see the environment from a different perspective, not only South Africa. So if you do have the opportunity, please make sure that you basically have your plan backed by action as it becomes a reality. What's also important is with these revision notes, it's important that you understand the key concepts and you need to master the theory to enable the questions in the exam. You are aware this is an objective response. It's a multiple question exam. Now, if you're not sure and if you don't understand the theory, you will not basically be in a position to answer the multiple questions. What the examiner does is he'll basically ask you certain questions in terms of multiple questions, and it's important that you make sure you understand the theory, because he might ask for a question similar to this, which says, for a manufacturing organization, one of the following would be a direct cost. And then what happens is he gives you 4 items to choose from, and if you're not sure what is the direct cost, you will be lost. So it's important basically to make sure that you understand the theory. So what we'll do is we'll go through chapter 1, and it's important from the offset to know exactly what's the difference between a business case and what is a business plan. Some people get confused between the two. Now, myself, I've been doing business plans for a number of years. What I do is people ask me to help them to compile a business plan. Now, for a business plan, there are generics on the internet, but it's advisable to make sure that you understand where the other person is coming from in order to do a successful business plan. You need to understand his business. You need to understand his cash flow. You need to understand his income statement. I see Ishuka, you raised the hand there. Do you want to ask a question? Ishuka Makwea.
I'd like to have these questions. So how can I get these sample questions on exam?
Ishuka, after the session, we will send you some documentation. I think
Okay.
Saudi and that team will basically send you information after the presentation.
Okay. Great. Thank you.
Okay, thanks, Ishuka. So guys, again, in a business plan, you normally do business plans for startups. So as I said, it's important not to use a generic business plan, but to make sure that you basically understand what the business revolves around. So if you look at a business case, if you're a procurement manager and your CEO will basically ask you to compile a business case, you need to know exactly what a business case involves. You also need to interact with various colleagues, what to make sure that your business case is basically of a sound financial nature. Also, in terms of finances, you basically need to test the finances. There's various ways to look at the finances. You can use your payback period. You can use your NPV, which is your net present value, or you can use the discounting model to determine whether the project, in terms of the business case, is feasible, whether it's practical, and whether it's profitable. So it's important just to make sure that you know the difference between your business case and your business plan. And then also in terms of chapter 1, we basically looked at straight rebuy, modified rebuy, and new purchase. So it's important basically to make sure that you understand the differences between a straight rebuy and a modified rebuy. Now, again, with procurement, there's different acronyms to be used. Now, acronyms can mean different things to different people. So what's important is you actually need to understand in the context in which acronyms are basically used. For example, the CIPS diploma, which you currently studying, there's 8 modules. Prior to this, there were basically 5 modules. So in the 8 modules, you will come across different acronyms. What I've done is basically I've compiled a list of all the acronyms used in the 8 modules, as well in my current lectures with other organizations, and it's quite useful to have a list of acronyms. So in meetings, when people speak about a RACI, or when they speak about a RACC, or when they speak about a PIP, or they speak about a PID, you actually need to know exactly what those acronyms mean. So in terms of RACC, it's important to make sure that you can use this in your practical working environment. The study guide makes extensive use of examples, but it's important just for your information to apply this in your practical working environment. So in terms of regularity, what's important here is just to make sure that you look at all the legal requirements, that you know exactly, that you understand the commercial terms and conditions regarding contracts. You also know, as I said, I worked in different parts of the world. Each country basically have their own rules and their own regulations which you need to abide to. So it's important to be familiar with the regularity terms and conditions. Also, in terms of availability, that's quite important because you need to make sure that you basically have a continuous supply of goods. We're all witnessing now the problem with semiconductors. There's a worldwide shortage of semiconductors in terms of chips. Major industries has come to an halt because of the semiconductors. So your job as a procurement manager is to make sure that you have the available raw materials as well as components, and also to make sure that you have the right quality because it should be fit for purpose. Also, in terms of service requirements, again, you need to have the support, you need to have after sale service, and what's important is cost. We're going to speak about cost later. You have different types of cost. You have fixed cost, you have variable cost, you have direct cost, you have indirect cost, we have target cost. So it's important for you to become familiar with cost because ultimately your cost will determine your profitability. And then what's important is you need to make sure that you're innovative because if you're not innovative, if you're not creative, you'll be left behind. I see there's a hand raised.
Yes, thank you, Roy. I just want to find out, are we going to go back up to the straight rebuy, the modified rebuy, and the new purchase to discuss it just a little bit?
Yes, we
Okay.
will. We
Okay,
will.
thank you.
Also, what's important is you need to understand the procurement cycle. Now, this procurement cycle is vital for you to basically understand how procurement works. Just to run through it briefly, as I said, these notes will be sent. What's important is it's 8 step in terms of the procurement cycle. What's important is you need to know the requirement. This course basically speaks about the business need. So it's important to understand the course that you're actually studying and how it actually fits in with other modules. So um, once you actually know your need, you need to know your source of supply in terms of the REXI model. You also need to know your vendor selection. There's a process how to select and how to evaluate your vendors. There's also a purchase order processing cycle. Now, some of you might use different ERPs. You might use Oracle, you might use SAP, you might use Microsoft Dynamics. During my careers, I basically used most of the ERP modules. So it's important to make sure you understand the functionality of the ERPs. Also, how to issue an order, how to monitor a purchase order. Step number 6 is basically a GR, which is a good receipt. And then it's also important to make sure the terms of payment. How often do you pay your terms of payment to your suppliers? And then, what is the agreed terms of payment? Because ultimately it affects your cash flow, which we're going to speak about later on. And then in terms of payment processing, you need basically an accounts payable section, what to make sure that the invoices are basically 100% correct before payment is issued. Now, we will speak later about variances in material, variances in labor, which can result in incorrect invoices issued by suppliers. So it's important for you as a procurement manager also to make sure of your supply invoices. Now, someone asked me earlier when we speak about the different types of purchases. Now, what's important is in procurement, we basically have 3 main types of purchases. Now, what the sketch here in front of you basically speaks about, in each organization, you will have these different types of business purchases. Now, as a procurement manager, you need to be aware of these 3 types, because in terms of a straight rebuy, as a purchasing manager, you can basically assign that to a buyer, because what happens here is you basically have routine purchases of the same products with the same terms and conditions. So there, as a procurement manager, you don't have to spend time on this, because what you can do is you can delegate this function to a buyer. Based on the MRP, you basically can just oversee the requirements to make sure everything basically functions accordingly. However, if you come to a modified rebuy purchase, this is more elevated, because new task purchases, there is change on subsequent orders, or in straight rebuy requirements are modified. Now, if you use an example, I mentioned earlier about semiconductors. Now, in terms of the shortage of semiconductors, we'll basically engage with the engineers in order to source alternative products. Now, as a procurement manager, you need to become aware of alternative projects. To help you, we've basically got 3 items that can assist you, which is basically the value analysis, and we can also use the value engineering to assist the procurement manager in order to make sure that we can basically source alternative products. So what we do is we also need to understand the market. Now, although your function is not basically marketing, in your team you basically have marketing managers. However, you need to collaborate with them in order to understand the market analysis, which we will cover later on. So you need to source a product. You need to source a component that will do the job, because if you don't source the necessary product, your production will come to a standstill. So you actually need to make sure that you basically understand the chain modification in terms of a modified rebuy purchase. I see Simone, you got your hand raised there, Simone.
Yes, Roy, I just want to ask you, would the modified rebuy then in essence be, say for instance, we have a supplier on contract, but the supplier is unable to supply. Let's say for instance, they have a steel shortage or something like that. Would the modified rebuy then be us benchmarking and then using a different supplier just to get the stock in so that operations can continue to run?
Yes,
Okay.
that's quite important because otherwise you'll have a bottleneck. And
Yes.
as you
Okay.
know, bottlenecks cost money. So
Yes.
thanks, Simone, for that. Excellent question. And then the third aspect is basically your new task. Now, what happens here is we spoke about business cases early on. So now your strategy in terms of your company's strategy, they basically want to expand. They want to increase their market presence. So the board will come to you as the procurement manager and ask you basically to see whether we can basically expand into a country. Let's take, for example, Nigeria. So you, as a procurement manager, needs to compile a business case. Simone, I see your hand is still up. Do you want to ask another question, or is that a
No, sorry, I'll lower it. Sorry, Roy.
okay? No problem, Simone. So then, what happens is you compile a business case. So now you basically need to expand into Nigeria. So what you need to do is you need to make sure that you can have a sound business case because you're based in South Africa. You basically want to diversify. And the reason why you want to diversify is because it's part of your company's strategy. The market in South Africa has become saturated. You have exhausted your clients. We're going to speak later about the PLC, which is your product life cycle. You need to diversify. So, purchase items to be used to perform the new job or solve a new problem. Now, this is where the procurement manager spends his time looking at strategic issues, engaging with the board, engaging with the CEO. Now, based on my practical experience, I also had to compile a business case. And a business case doesn't take a week, it takes 3 or 4 months to compile a sound business case. So, why is it important? Is because my role in developing a business case. A business case is a proposal for a strategy or project. It may contain much of the same information, but in a shorter format for strategy as well as for internal budget approvals. It is a justification for undertaking an action. Now, again, this business case must be aligned to the strategic goals of the company. This goal was basically to increase market penetration as well as to introduce new markets, as well as to engage with sending staff from South Africa to Nigeria. So primarily as a procurement manager, I was involved in the business case. However, you cannot do a business case on your own. It's important to interact with different colleagues. You need to interact with your technical manager. You need to engage with your marketing team. You need to engage with the engineering team. And also, it's important to get their sign off. Now, there's a few reasons why you need to do a business case. What's important is it provides an audit trail. You need to make sure that you necessarily have to have the documents for the scope of factors. Now, the scope, we'll speak about it later on during the day because the scope involves different specifications. If you don't understand the scope, you will not be able to write specifications. Now, specifications are extremely important because in this case, your output specification will focus mainly on performance. As I said, we will speak about specifications later on. What's important is it also provides a template against which a procurement outcome can be monitored. Now, with the project, you basically have a start date and you have an end date. So it's important to know when the contract is coming to an end because a project cannot run indefinitely. A project will be a period for either 12 months, 24 months, depending on the complexity, depending on the duration, and depending on the cost. And then what's important is cost reductions need to be made. Now, we all know that primarily due to COVID, unfortunately, companies are retrenching staff. A business is not so good in certain operations. So what you need to do is, if the need arises, you need to make sure that you basically manage cost reductions effectively. Again, in terms of a business case, it needs to record the results of your assessments in terms of your market analysis, in terms of project scoping, as well as your delivery planning analysis. As I said earlier on, guys, it's important to engage with your marketing team. They're experts. They are trained to do a market analysis. And also, you need to engage with your staff in finance in terms of economics, because they basically understand supply and demand analysis in terms of the steeple analysis. When you do an undertaking, you need to understand what is the social environment, the technology, the economics in terms of gross domestic product, in terms of inflation. So it's a document, as I said, that needs to be signed by relevant stakeholders that confirms the justification of an undertaking based on commercial grounds. It documents the information needed to decide whether to support a proposed procurement activity before significant resources are committed to the development. If you have a business case, it needs to be analyzed, because your budget might be 20 million rand for this project. So it's important for the board to examine your business case to make sure it's sound. Therefore, it's important to get all the stakeholders sign it off. So, for example, when I did my business case, primarily I was accountable. However, I had to basically get the buy-in of all the relevant stakeholders. So, in terms of the technical functions, I had my technical manager to sign it off. In terms of the financial assessment, in terms of the soundness, I got my financial manager to basically sign it off. So it's important to get approval and justification for your business case, because you might spend 20 million rand on it. It has to be a success. It can't be a failure. Now, with business cases, believe me, you will either find problems or you find opportunities. Now, when you do a business case, you need to identify a problem. That's why we're actually discussing business needs, because we need to solve a problem. Now, I think Simone asked a question, are we going to speak about modified rebuy? Now, you have to develop a business case for a new or a modified purchase. The reason why? Because of the risk involved, the complexity, and also, as I said, to make sure that you don't waste money. Businesses nowadays cannot afford to waste money. So you have to develop a business case for a new or a modified rebuy. Now, what's important is, when you do the business case, you have to have an executive summary. Now, when I did my business case, I basically had my executive summary as the last item. However, when you present it to your board, you need to present your executive summary first. And the reason why is because it gives an outline of the business case. It makes sure that the business case is aligned with the company's objectives, with the company's strategy. Then you also need to look at your long-term strategy considerations. Again, the business requirements. What does the business need? Why does it need to go to Nigeria to expand business? Again, you need your price and cost analysis. Um, People tend to get confused with price and cost. However, as a procurement manager, you need to make sure that you understand the difference between a cost analysis, a price analysis, and then also you need to know CBA, which is a cost benefit analysis. Again, like I said, you need to engage with your marketing team. You need to engage with your technical team, your engineering team, your R&D team to make sure that technically the business case is sound. Also, you need to look at the vulnerability analysis, considering the sourcing objectives. As I said, when you do a business case, you have to um, make contingencies. There's risk that we'll speak about later on. You need to basically source alternative products or components because we're living in a very volatile and a very dynamic environment. In your business case, you basically have to make use of assumptions. You basically need to make sure that you basically have key suppliers. If one supplier lets you down, you need to make sure you have other suppliers. Also, if you do have a supplier and the supplier's premise is basically burnt down or there's an earthquake, you need to make sure that you have an alternative. And also, what's important is once you have all these items itemized, it's important to have an implementation plan. This is extremely important. You might have all the T's crossed, but you need a team to implement it. And this is why the executive will basically interrogate your business case to make sure that you have an excellent implementation plan. And also, what's important is the ultimate aim is to make sure that the business case will have a competitive advantage because the ultimate aim is basically to sustain your business, to increase your EBIT, and to make sure that your business is around for the next 5 years, 10 years, 15 years. Now, when management evaluate your business, they'll basically look at the return on investment. They'll see whether your business case will increase productivity. And also, what's important is the time to market. Once your plan is implemented, they need to make sure whether the customer is satisfied. And then, so, as I said, you will encounter risk. You need to identify risk. You need to assess the risk. You need to basically mitigate the risk. So we will expand later on how to mitigate the risk because you will basically encounter risk. Again, you need to understand the difference between open-end problems and closed problems. Open-end problems is where something is stopping the achievement of an objective or negatively influence the progress and can include the following. There is an emerging monopoly in a key market and competition needs to be stimulated. Now, this is an open-end problem because you need to make sure that you have a solution to the problem. So your executive manager will come to you and say, we need a 10% cost reduction in order to make sure we meet corporate requirements. Now, what you need to do is you need to collaborate with your suppliers and explain to them why you need reasons for cost reductions. A closed problem. This appears when something happens that should not happen in the first place. For example, you have a staff member underperforming and is not achieving expected results. And you, as a procurement manager, you've picked up a huge number of mistakes. Now, what happens is if you have a staff member that's unperforming, it will basically create problems, and you need to discipline the staff member because this mistakes will basically cost the company money. So you need to engage with your staff member to make sure that you can solve the problem. What I've done here is I basically enclosed a diagram how to identify the problem, how to define the problem, make sure that you understand whether it's an open problem or whether it's a closed problem. And then once you understand the problem, you need to develop alternatives. Again, I spoke about risk. You need to analyze the risk. You need to make sure that you understand the complexity of the risk. What is the likelihood? What is the impact of the risk? And then you basically need to analyze the alternatives. Once you're that, you need to make sure that you understand the solution, make sure that the stakeholders understand the proposed solution. Once all stakeholders agree on the solution, then you basically implement the solution. It's no use implementing without evaluating the solution. So you need to evaluate the solution to make sure that your problem has been identified and the problem is solved. We spoke about different elements regarding costing. Now, guys, whether you're a senior buyer or whether you a procurement specialist or whether you a procurement manager or a supply chain manager, you need to know all these different terms here. You need to know the difference between cost and price. You need to know how to collect information on costing. You need to know the difference between fixed costs, variable costs, semi-variable cost. You need to know what is the difference between an RFI, a request for information, a RFQ, which is a request for a quotation, and the RFP, a request for proposal. You need to know when to use it, you know how to use it, and you need to know to whom to send the RFI, the RFQ, and the RFP. Also, you need to know the difference between primary activities and secondary activities. What are the three main methodologies to calculate estimated cost and budgets? You, as a procurement manager, you need to know the methodology in terms of estimating cost and in terms of budgets. A procurement budget forms part of the main budget. You have a financial budget, you have an operations budget, and you have a procurement budget. And all these budgets are basically aligned and it rolls up to the main budget. Once the budget is done, you basically have a forecast. As a procurement manager, you also need to understand the difference between your suppliers in terms of arm length and in terms of strategic suppliers. Uh, Target costing is extremely important. We're going to speak about target cost setting. You actually need to know exactly how to use it, when to use it, and to which suppliers are you going to engage target cost setting. You also need to know how to perform a price analysis. What are the approaches to total cost of ownership and your whole life costing cycle? It's important to understand the mechanics and the operation of a Monte Carlo model. This model is a guideline to assist you in preparing your histogram in terms of how the Monte Carlo will basically assist you. Again, you need to know the stages as well as the benefits of whole life costing. Um, this is a diagram which you're all quite familiar with. However, This is quite an important document because this document speaks about your pricing model, your costing model, as well as your indirect cost, your direct cost, your variable cost, and your fixed cost. This diagram also assists you how to do a break-even calculation. And it's important in a manufacturing environment to know exactly how to calculate a break-even calculation. Now, there is a calculation which I'm going to give to the team. It takes about a minute or two to do the calculation in terms of the break-even calculation. So before 10 o'clock, we will do the calculation. Again, as a summary, I've given you the basis of difference in terms of fixed cost, variable cost. This is basically the foundation of costing, and it's expected that all buyers and all procurement staff understand what is fixed cost and what is variable cost, and also what's important is the controllability. A variable cost are controllable cost, a fixed cost are not controlled. Now, I spoke about the break-even calculation. Now, as you can see, we basically got our sales revenue. We got our total cost. Your total cost is basically, again, divided into your fixed cost and your variable cost. Now, your break-even point is where your sales revenue and your total cost intersect. That is a break-even point. Now, with the break-even calculation, we got two calculations. We need to calculate the break-even point in units in terms of the output of the organization, and we also need to calculate the break-even in rand. Now, what I've done is I prepared a simple calculation. So this takes about a minute to do. The calculation is calculate the break-even in rand and its units. If the selling price per unit is 50 rand, the variable cost is 30 rand, and your fixed cost is 50,000 rand. I've also given you a formula there. Your forecast is equal to your quantity times your revenue minus your variable cost. So guys, take a minute to do the calculation, and let's see who basically has the first correct answer. So there's two steps here. Number one, calculate the break-even in rand. The second one is basically to calculate the break-even in units. Does anyone have the answer? I hear someone in the background. Do you want to explain to the group what is your answer?
Roy, may I just comment? I'm not sure if you can see the chat box in your screen. Students are posting their answers there and comments as well. Can you see the chat box?
Yes, okay, I open it here now.
Okay,
so someone
sure.
said here,
Okay.
Samuel said the The answer is 2,500. That's correct, Samuel. 2,500 is the break-even point. Well done. The second part of the question is how to calculate the break-even in Rand. So all you do is take Samuel's answer of 2,500 times your selling price per unit. So it's 2,500 times 50 Rand will give you 125,000 Rand. So thanks, Samuel. So just to confirm, guys, the break-even unit, 2,500 units, the break-even in Rand comes to 125,000 Rand. Thanks for that responses. The second part of the question is, if a company wants to make a profit of 60,000 Rand, what would be the selling price? Now, remember on the break-even point, Samuel calculated that the break-even point is 2,500, and the break-even in Rand is 125,000 Rand. Now, that's when no profit is being made. Now, the question is, if a company wants to make a profit of 60,000, what would the selling price be? Okay, just because of time constraints, in this calculation, what you do is your fixed cost is 50,000 Rand. So what you do is you take 50,000 Rand and you add it to 60,000 Rand, you get 110,000 Rand. Now, your selling price is 50 Rand, your variable cost is 30 Rand. What is the percentage in terms of the variable cost? That comes to 40%. So all you do is you take your sum of 110,000 Rand, you compute it against the percentage of 40%, and then you come to a selling price of 275,000 Rand. So that would be the selling price, 275,000 Rand, if the company wants to make a profit of 60,000. Now, in order to check your calculation, if you take 275,000 Rand times 60%, which is your variable cost, you come to 165,000 Rand, plus your fixed cost of 50,000 Rand, and then the difference is 60,000 Rand. So that just confirms that your selling price is 275,000 Rand. So guys, it's important for you to understand this basic function of break even, because it basically summarizes your direct cost, indirect cost, variable cost, and fixed cost. So before 10 o'clock, it's important when you do costing, when you do your break-even analysis, you need to understand the segmentation for the PCA. What is a PCA? A PCA is basically your purchase cost analysis. You need to understand the foundation of costing before you can understand the segmentation model. What does this model mean? I spoke earlier about you need to understand your suppliers in terms of arm's length principle and in terms of your strategic alliance. Now, what's important is if you look at the nature of the purchase, whether you look at a straight buy, a modified rebuy, or a new purchase, you can use this diagram to analyze the three types of purchases, as well as to give you the information on the purchase cost analysis. Now, if you basically engage with a supplier in terms of arm's length principle, this has a low impact because it's low unit cost items, and items are purchased in large quantities that are made for stock. And here you have many suppliers that can supply you with a project. So that is basically low unit cost items. If you go over to strategic alliance, this is quite important, is because it's critical projects, And with critical projects, it's basically long-term capital investments. I spoke earlier on about the business case, which takes 3 to 4 months to compile. And here you need to engage with a strategic alliance partner. Why is it important? Is because you need to know what is the distinctive competency and what is the future success of your company. So you need to engage with the correct suppliers in terms of your strategic, and you can assign your low-cost buyers in terms of your arm length to your normal junior buyers and your support staff. But you, as a procurement manager, you need to focus on your strategic alliance. Just to summarize the difference between a PCA and PPCA, your PCA is your purchase cost analysis, and this is a tool that is used to analyze the cost of materials and components so that strategies can be developed for reducing costs and to improve supplier relations. In terms of the PPCA, which is your purchase price cost analysis, this is information generated through a purchase price cost analysis that can be useful to the purchase by identifying the supplier's direct cost and indirect cost. This can also be used to analyze prices, and it enables the buyer to effectively negotiate with the supplier in terms of cost reductions, in terms of increasing quality, and in terms of increasing favorable terms and conditions. So procurement staff need to be familiar both with the PCA as well as the PPCA. I spoke about target cost. This is extremely important. A target cost is the expected cost of making a product or delivering a service. Now, when you interact with your R&D team, they'll come to you as a procurement manager and ask you to assist them with target costing. Why is this important? For setting target cost, it is to calculate the purchase cost analysis to determine which parts or components of the product or service is important to the client. Now, with target costing, you will be engaging with a BOM, a bill of materials. Now, I've been personally involved with a BOM that basically has 15,000 components. Now, with a BOM of that magnitude, it's important to make sure that you use the correct methodology in terms of your MRP, which is your materials requirement plan. My job was basically to focus on target costing. And it's important to, again, engage with your engineers. Unfortunately, you do not possess the technical skills. You're not trained as a technical manager. You're not trained as an R&D specialist. So guys, my tip is engage with people technically to make sure that you have the correct target costing. Also, what's important is before the break, it's important to understand the difference between TCO and whole life costing. I see someone has raised their hand there. Okay, you can unmute yourself if you want to ask a question. Okay, I see 3 participants has raised their hand. Do you want to ask a question? Okay. Guys, it's important for you to make sure that you understand the difference between TCO and whole life costing. This here is just a summary of the differences. This is much more complicated. There's much more information. In fact, there's a separate course on TCO and whole life costing. There's a 3-hour course just to understand the differences and the complications regarding TCO. But as a summary, TCO refers to the sum of all cost incurred through the lifetime of owning or using an asset. With whole life costing, it's a technique that establishes total cost of ownership from production of the product through the use, the repair, the maintenance, the disposal, and the decommission of a product. Now, again, I can speak from experience because I was involved with my previous company doing whole life cycling costing, where our company was awarded a turnkey project. Later on, we're going to speak about through life contracts, but just to give you some foresight, in terms of whole life cycle costing, you basically have to do a complete analysis in terms of a turnkey project where you, as the main contractor, is involved with the design, with the supply, with the deliver, with the installation, with the commissioning, with the maintenance, as well as with the decommission of the project. So I was involved with a project that actually lasted 3 years. And what I've done is I basically used my whole life cycle costing as a methodology to make sure that in the end, the project was successful. So in terms of the 3 stages, the whole life costing, planning, preparation, and implementation. What's important is you need to consider EOL, which is basically your cost, include your safe disposable, decommissioning, and reinstatement of land or buildings for alternative use. So, guys, we covered quite a lot. It's 10 o'clock. Before we go on tea break, is there any burning question that you want to ask?
I wanted to get clarification on when you mentioned costing. I didn't quite
Faith, I can actually I can hardly hear you. You're breaking up. Hello, Faith.
Hello.
I can hear you now.
Hello. Okay, this is my first time doing this exam, and I've been wondering, do the questions only cover for the same module or a different module? Are the questions from only within the module?
Yes. The questions for the exam is basically only from this module. So they'll only ask you questions regarding defining the business need. Now, TCO and WLC is part of defining business needs. So you basically have to know a TCO and whole life costing in order to answer the multiple questions in the exams, because these are elementary issues. It's what's related to all the costing I spoke about earlier on, and they will ask a few questions regarding costing in the multiple questions.
Okay,
So,
thank you.
So again, just to answer your question is, for the exams, you basically need to become familiar and understand all 3 chapters and to make sure how it's interrelated, because in chapter 1 they speak about whole life costing. In chapter 3 they speak again about whole life costing. So it's important for you to understand the concept. So when the examiner asks you questions on either whole life costing or TCO or direct cost or indirect cost, you need to make sure that you're in a position to answer those questions. Okay, thanks for that question.
Hi, Roy, Glenda here.
Hi, go ahead.
Roy, I posted a question on the chat. This is a question that came out of the green test for outcome 1. Do you mind us going through that question?
Okay, you got a question here. Is this Glenda speaking?
Yes, correct.
Okay. Which of the following problems may be identified as closed problems? Select 2 that apply. And then you got here a productivity of construction, logistics cost, incur a large portion in wholesale prices, and shortage of key medicines. And you basically got a cyber tax, take down whole company IT systems, and the suppliers don't comply with the company's policies on the underage labor. Okay, so this question.
Yes,
Yes.
Yes,
Carry
go
on.
ahead. Sorry, go ahead.
No, you wanted to say something?
Yes, I selected D and E and I did not get it right. So I just wondered what is the correct answer here?
Okay, this question basically what relates to what I said earlier in terms of closed and open problems, right? So to answer that question, it's important for you to understand the theory. Now, just to recap on what I said earlier on, what is an open-end problem? These are basically when something is stopping the achievement of an objective or negatively influence the progress and can include the following, right? So that's an example of an open-end problem where there's a problem and action needs to be taken in order to solve the problem. That's an open-end problem. Now, with a closed problem, it's something which should not have happened in the first place. So
Correct.
that is the difference between the two. Now, in most organizations, we encounter both problems. Now, the open-end problem is a more complex problem because you need to supply your mind to answering this question. So, in terms of the chat box, the first thing that you need to do is to understand whether it's an open-end problem or a closed problem. Now, in this case, it's basically an open problem. So you selected a D. A D is basically incorrect because what D says, it's a cyber attack. It takes down the whole company's IT system. So that's why D is not correct. Now, Glenda, if you can relate this to what happened now recently in America, where there was a cyber attack, where the transportation system came to an end because people engaged in cyber attack. So definitely this is not a closed problem. Then E.
But it's a bit strange, Heroy. I got D correct and E wrong. That is why this module is a bit confusing for me, or this particular subject.
Yeah, again, what's important is that you just need to understand the theory, because you said you got E wrong. The suppliers don't comply with the company policy on underage labor. Now, if you see, this relates to a problem where external factors don't comply with your company's policy on the underage labor. So that's why it's important just to understand the theory behind this, just to make sure there is no confusion regarding open-end problems and closed problems. But what we will do is, at the end of the session, what I want to do is, it's important to get all your questions so we can basically approach all the questions methodically and give you guideline answers on all the questions. Due to time constraints, we won't basically have time to go through all the questions, but it's important to collate all these questions at the end. Okay. So what we'll do now is we'll take a 5-minute break and then come back, and then we can see how we progress. And again, guys, as I said, this is a 3-hour session, so we will collect all the questions, and I'll do my best, basically, to submit responses to all the questions before the end of Monday. So let's take a 5-minute break then.
Mana? Indono. Hmm? Hmm? Trying to be.
So esasike sikhuphele ku-pipe, so laa pipe ngulu kumele ujima ngaphandle apha, yabo? Eba bawenzele laa pipe uyophumela ngaphandle, bona baqolela apha kubafaka, bathi umntu uyozibonela ngoba wenzisile. So funeka kutshintshelwe laa pipe ayophumela nakwenye indawo.
Yolanda, please, can you mute yourself? Please, can you mute yourself?
I'm very sorry. I'm very sorry.
Okay, guys, I trust you had a good break. So we're running slightly behind in terms of time. So we'll try and make up for the lost time because we need to finish here by 12:30 because I'm sure you guys got all commitments after this as well. So it's important to carry on and to make sure you guys get all the information just to assist you with the revision. So we'll carry on with our exercise. We spoke earlier about the Monte Carlo model. What's important is that you need to make sure that you have the correct market data that can assist you in terms of costing and pricing. And the study guide does a great job in explaining the difference between secondary research, which is desk research, and field research. The study guide also make use of quantitative data as well as qualitative data. So that's all in the study guide. So you can just read that information on there. Again, like I said, it's important as a procurement staff to know exactly when to use the request for information, the request for quotation, and the request for proposals. Now, if you basically want information on certain products or certain information, you basically issue a RFI. Once the project has been determined, then you look at your short list of suppliers, and then you basically do the request for quotation. So in your database, you might have 10 suppliers, you might have 15 suppliers, and then you only issue a request for quotation to those shortlisted suppliers, because based on your previous information on your RFI, and your request for information, you can basically require a request for quotation from your shortlisted of suppliers. Now, the primary activities and the secondary activities, that can also basically assist a procurement manager to determine how to engage with different stakeholders. So just to summarize in terms of the Porter's model, you basically got your primary activities and you got your secondary activities. Now, early on, we spoke about direct cost. Now, direct cost is usually associated with primary activities. So you can see there your inbound logistics, outbound logistics, and service. That's basically your primary activities, and your direct cost is more focused on that. In terms of your indirect costs are basically situated and involved with your support activities. So here you can see procurement is an example of a support activity, and that's basically where we usually get our indirect cost. Now, at this stage, it's also important to speak about the value chain, because it's important that you get the value chain, you get the value analysis, and you get the value engineering. So I think this is quite a good time to speak about the three, just to make sure that there's no confusion regarding the three values. This is a famous exam question. It always appears in the multiple questions where they basically ask you about the three types of values. So from the onset, make sure you understand the difference between these three values. So a value chain is basically a set of activities that adds a value to the items that the company buys so that the finished product can be sold at a profit. Now, based on this diagram here, you can see it summarizes the primary and secondary activities and it can assist procurement in understanding how suppliers support the buyers. So various factors such as the objectives and the drivers and the commodities and ownership is taken into consideration. Later on, we'll speak of the different factors, but again, your study guide explains this quite in detail regarding the various factors. If you look at the value analysis, now the value analysis is a systematic analysis and challenges of the component parts of a product to ensure that the cost is fair and reasonable. So in your procurement environment, you need to engage with your internal stakeholders. You need to interact with your engineers, with your technicians, and to make sure that ultimately the cost is fair and reasonable, and it has to improve the value of the product. Now, when you look at your value analysis, it's important that you look at the existing product and see how it can be used in the different methodologies. Now, there's three methodologies that we can basically use. The three methodologies is basically to determine the value of each component, to establish cost reduction opportunities by optimizing parts and components. Again, you need to engage with your support staff. And also the third way is help understand the user value and how it can be improved. If you look at value engineering, it's usually concerned with new products, and the objective is to reduce costs and to increase value to the end client. Now, I'm sure most of you are familiar with the Kano model. Now, the Kano model is a tool, it's a methodology of deciding which functions of a new product or service should have. Now, also with the value analysis, there's a 5-point processing for carrying out a value analysis. So it's important for you to understand this 5-point process for analyzing the value analysis. So guys, that's just a summary of the three value concepts: a value chain, a value analysis, and a value engineering. Make sure you understand this to enable you basically not to lose any marks in the examination. And the second point is this is important in terms of your career in the procurement field. Now, this diagram here, when you look at your business case, it's important that you look at your 5 whys. And again, in the manual, it speaks about the 5 whys. It speaks about the issues management, and it speaks about the CBA. If you come across your CBA in your board meetings, all it means is a cost benefit analysis. Now, there's something that you need to know is the issues management. So this issues management is quite an excellent mind mapping exercise because it speaks about the external environment. Here it speaks about the global marketplace. I mentioned previously, it speaks about the economics, it speaks about the political, and it speaks about the technological aspects. So here you can look at your steeple or look at your pestle analysis. In terms of your performance, your organizational performance, here it speaks about your organizational growth and the profitability of the company. Here you can analyze your gross profit as well as your EBIT. Your EBIT, earnings before interest and tax, and it also focuses around your internal environment. So here, in terms of your internal environment, it speaks about your RACI. Now, your RACI is basically your who's responsible, who's accountable in terms of who you need to communicate with, and the I is basically informed. So that is your RACI. Your internal environment also speaks about your different management styles. Now, you guys work for different companies, you work for different organizations. Each company has their own management style. It can either be autocratic, or it can be democratic, or it can be a participation management styles. It all depends which company you work for and which internal environment they use in terms of their management style. Now, in terms of this issues management, what's important here is that this is basically used in corporate management. It's also used in R&D, and issues management is generally concerned with identification, with analysis, as well as the projected timing of emerging issues, both from an external environment and an internal environment. So use this issues management in terms of assisting you, in terms of your business plan, your business case, open problems, and close problems. It's quite a useful analysis which I used quite extensively. Now, also, there's a couple of notes here which you guys can read. What's important is you need to understand, again, what is hybrid strategies, what is brainstorming, and what is benchmarking. You have different options. Strategy options can be generated using brainstorming techniques with a peer group. I'm sure most of you already used brainstorming. It's quite a useful methodology. Alternatively, you can use a hybrid strategy, which can be developed by comparing features of existing strategies and combining them to form new ones. So when you ask to do a procurement business case, I've just summarized 6 interventions that you can use as a procurement manager to finalize your business case. So the 6 types of interventions are basically your market intervention, a technical, cost structure, work process, supply relationship, and supply chain. So I have covered all these already in terms of the markets and in terms of your cost structures and in terms of how to engage with your suppliers and also in terms of the value chain. Now, guys, just to make sure we're still on the same wavelength, what we're discussing here is basically 3 criterion when reviewing business case. So the first one is the 5 whys. The second one is your issues management. And your third one is basically your cost benefit analysis. Now, this is an extremely useful tool because, again, there are 6 steps in terms of the CBA. What's important is before you do your CBA, it's important basically for you to understand the framework. Once you understand the framework, you need to identify the cost and the benefits. That's why it's called a cost benefit analysis. Now, in the end, your benefits must exceed your cost. Then that means your business case is sound. However, if your cost outweighs the benefits, then you have to redo your business case. Fortunately, with this cost benefit analysis, there's a 6 simple process in order to guide you on how to do this cost benefit analysis. So I do have a diagram here which explains the cost benefit analysis. Now, it's important to use this and to make sure you understand it. So as I said, it's important first basically to define the framework for the analysis. What analysis? We're speaking about basically your business case. We're speaking about a closed problem. We're speaking about an open problem here. So this CPA can basically assist you in all those activities. So what you need to do is, the second step is you need to identify and classify your cost and your benefits. So here you basically list all your direct costs, your indirect costs. Your total cost comes to 15 million rand. You've taken into account your TCO, you've taken into, your whole life costing, and then you come to your total cost. Now, you also need to see what is the benefits. So if you want to go to Nigeria, one of the benefits is you'll basically have access to a market. Nigeria's population is quite huge. There's over 100 million people in Nigeria, which means that you have a benefit of the market and you have the benefit of a market penetration. And this, as I said, you do in terms of your market analysis. So there you can see what is the benefit. Now what you need to do is, as I said, for a project, there's a start date and there's an end date. So what you need to do is you need to have a timeline for the expected cost and revenues. Initially, you will have cost because you will have cost in terms of R&D, you will have cost in terms of infrastructure, and you will basically have cost in reallocating members from South Africa to Nigeria. So that's basically part of your expected cost. It's part of your budget cost. However, you also need to see when your revenue will come in. So that's why the exercise I showed you early on in terms of break even, it's important to do that correctly and accurately. And then you need to monetize the cost and the benefits. So what you do is you translate your benefits into a value. And as I said, based on your business case, it might come to 15 million rand. You also need to interact with your finance manager in order to use the NPV, which is your net present value, and also a discounting cost. Because why? There's a timeline. It's a 5-year project, and you need to calculate your net present value. So all this is basically a guide in terms of your cost benefit analysis. Now, when you look at these calculations here, for the purpose of this exercise, for the purpose of this module, there's basically various methods. As I said, you get your net present value, you get your IRR, your internal rate of return, and you get your payback period. Now, for this exercise, we will only focus on the payback period. So what is the payback period? Your payback period is the number of months or years it takes to return the initial investment. Now, as I said, the project might be 5 years. So a simple calculation is the payback period is the amount to be invested, take into account your estimated annual net cash flow. So this will determine the number of years it takes to return the initial investment. So if your initial investment, let's say it's 15 million rand, you need to do a calculation to see whether it's feasible. Now, early on, we spoke about the break-even analysis. Now, this payback period is similar to the break-even analysis, but instead of the number of units to cover fixed costs, it considers the amount of time required to return the investment. Now, what I suggest is in real life, if you guys want to do a business case, and if I am the CEO of the company and you're the procurement manager, what I would want is I would like to see 3 methodologies in terms of calculating the return on investment. So what I'd like to see is I'd like to see the calculation on the payback period. I'd like to see the calculation on a net present value, and I'd also like to see the calculation on the internal rate of return. Because then as a CEO, I'll be quite comfortable that you have done your analysis and it basically makes sense. When you look at your payback period, guys, again, include total cost of ownership, which is your obvious cost plus your less obvious cost. Most business cases which I've analyzed, they've only included the obvious cost. They forgot to include the less obvious cost. So your less obvious cost can include the impact on health and safety, and it can include basically your environmental cost. Now, use the whole life cycle. As I said, it's a technique that you can use, which is part of the TCO. So when I want to analyze a business case, I want to see all this in the business case before I will approve it. Now, again, with business cases, with business plans, you have to look at risk. What is the risk assessment? It is the process for identifying and handling any potential hazards that the project could face. Well, believe me, when I was part of that project at my previous companies, we basically had enormous risk. Now, you need to make sure that you can actually mitigate the risk. Now, fortunately, at the end of the project which I was involved with, I must say, hard work went into it, excellent planning went into it, and there's also risk. Now, when you look at risk, you can't do it in isolation. You have to consider it as a team event. Fortunately for the project, after the 3-year period, the project was quite successful. We've actually maintained an actual result of more than the calculated result. Let's assume the calculated GP was 20%. At the end of the project, our actual gross profit was 25%. Now, again, that takes a lot of planning, it takes a lot of collaboration, and it takes a lot of work in order to mitigate the risk. Now, it shows the major risk that can be considered and identify actions that can be taken to reduce or eliminate the risk. It is a systematic process of evaluating potential risk that may be involved in a project. Now, this diagram which I got here, it's also quite a useful diagram because it speaks about a risk assessment. And in your study guide, they also give you different factors in terms of risk assessment. Now, what you need to do is, in terms of risk assessment, you need to define the risk area. It can be basically internal and external. That will form part of your context definition. You need to identify a risk in all the phases of the project. Now, again, the project which I was involved with, it was an international project, which I had to source different components and different parts from suppliers based in Asia, Australia, Germany, in the USA. Now, as I said previously, we had a massive bomb. We had MRP. Now, what's important is when you engage with foreign suppliers, you need to be aware of the rate of exchange. So, you based in Germany, the currency of Germany is basically the euro. So, you sourcing components, semiconductors from Taiwan, from the USA, and from South Korea. Now, you obviously need to understand the complexity regarding the currencies. Your base currency is basically the euro where you operate from. And then you need to convert the foreign currencies into the euro, and you need to make sure that you don't incur any rate of exchange losses. Now that's an example of risk identification. So that was my part, how to mitigate the effect of currencies. So what I did was I basically hedged the foreign currency in terms of procuring forward cover. One of the other risks was basically suppliers. As I said, you basically have to engage with strategic suppliers. So you need to encounter risk in terms of cultural activities, language problems, background problems, and also one of the biggest problems I had was basically the timing factors. Because you're based in Germany, your suppliers are basically all over the world. So what I did was, in order to make sure the project was a success, I engaged with suppliers early hours in the morning in Germany to make sure that I can basically give the supplier a time frame in which to engage with me. And then, as I said, suppliers are scattered throughout the world. So that's one of the risk in terms of strategic supplier collaboration. After that, you need to look at your evaluation, your probabilities, and then how to treat the risk. In the manual, it mentions 4 T's in terms of basically tolerating the risk, or how to treat it, or how to transfer it. And then you also need to do risk monitoring in terms of how to monitor the risk. I see here I got a message from Pablo. Pablo is asking the question here. Hi, my fellow members. Is Mr. Roy going to assist us with the presentation? Yes, Pablo. As I said, Sari and her team will send this presentation to all the participants, and you can go through the presentation in detail, Pablo. Okay. Thanks for that question, Pablo. Okay. Continue with risk. This is an example of a risk assessment. Now, guys, this is quite an important diagram because it speaks about the impact and it speaks about the likelihood. Now, please use this risk assessment in all your projects, because here it basically gives you the likelihood of something happening and what is the impact. So just to give one example is, if you a procurement manager and you're working with a project and you are of the opinion that you engage with a strategic supplier, so the likelihood is that it's likely, and in terms of the impact, it's high. So you need to focus your attention on a likelihood and also a severe impact. So if I have identified a supplier as risk, you need to focus on this area, because what happens is, if you're busy with a project and the supplier cannot deliver on time, what will happen is the contractor will basically incur penalties. And if you look at some contracts, penalties can be quite huge. In some of the contracts I came across with, they basically got a penalty of 2% per month based on the total original value of the contract, based on the different time frames. So if your contract is late, you will incur penalties, and those penalties can relate into millions of rand. So believe me when I say is that you need to have a risk assessment so you can actually mitigate the effects. Now, for a project of a high magnitude of value, you need to have this risk assessment in each and every of the project meetings, and you need to determine whether the impact is negligible, whether it's minor, whether it's moderate, whether it's significant, and whether it's severe. So all the negligible and all the minor problems you assign to your buyers, your junior project managers, and all the significant and severe risk there you and your senior manager engage with all these risk activities. Now, as I said, once your business plan and your business case is approved, you need to basically look at the implementation plan. Now, when I saw a couple of business cases, I basically interrogated those business plans and those business cases. Why? Because I wanted to make sure that they covered each and every angle of the business case. So what I did was I basically asked detailed questions. I asked probing questions. I asked open-ended questions. I asked closed questions just to satisfy myself that the business case was basically sound. Because if you in a position to approve the business case and something goes wrong, and then ultimately you are responsible. So what's important is we spoke about the cost benefits. We spoke about the risk. Now, before you basically approve the business case, you need to make sure that all factors are covered. We spoke about the RACI, responsibility, accountability, communication, and who to inform. We need to make sure there is an effective strategy. We need to make sure there is a proper change management strategy. And we need to make sure, guys, that all the specifications has been agreed to. Early on, we're going to speak about specifications. Specifications is important. You need to know as a CEO, before you approve the business case, you need to make sure that all the performance specifications, all the conformance specifications, and all the technical specifications has been addressed. So you and your technical directors need to make sure that the specifications is basically 100% approved, because specifications is extremely important. We'll speak about it later, the different types of specifications. Again, we spoke about benchmarking. What is benchmarking and what are the main types of benchmarking? Now, what is the focus? The focus is to measure and continuously improve an organization's processes, procedures, and policies. Those are the 3 P's: processes, procedures, and policies, against that of best practice. So what's important by organizations rating their performance against others, it can identify opportunities to create value. Again, guys, we spoke about value, how to add value. And also see what is the areas to improve, compare performance against customers' expectations. So that is basically the primary focus of benchmarking. Now, if that is the primary focus, what is the objective of benchmarking? So the main objective, the way I think it is basically to find an optimum performance on given issues. Now, the objective is basically to improve, and benchmarking should form part of any organization's quest for continuous improvement. So whether your company got 100 staff or 500 staff, or whether your company's turnover is 10 million or 100 million or $1 billion, please get involved with benchmarking. As I said earlier on, we want your companies to grow. We want your companies to be sustainable. We want your companies to show a healthy profit, because without profits, you can't pay your supplier, you can't pay your staff, and also it will affect your cash flow. So you need to engage in benchmarking. Now, again, there's different types of benchmarking. Just to give you the 4 types of benchmarking, you got your internal benchmarking, you got your competitive benchmarking, you got your functional benchmarking, and you also got your generic process benchmarking. Now, just to give you a summary of each, your internal benchmarking, what is that? It basically arises when one part of the organization compares its performance with the same part of the organization. So this is basically if you have like a holding company, and in the holding company you have various subsidiaries. So there you can do internal benchmarking. The second form of benchmarking is competitive benchmarking. So what does this mean? It means when competitors agree to benchmark their processes. The key word is processes. Now, in some cases, there is a reluctance to do this. So just be careful. Exercise extreme caution when you do competitive benchmarking, because what I don't want you to do is colluding with your suppliers. We want to make sure that you understand the difference between competitive benchmarking and collusion. The third type of benchmarking is basically your functional benchmarking. Now, as the word indicates, it compares functions. So there you can look at your functions such as purchasing, supply, finance. Now, again, guys, this is when you look at your similar functions in your industry. Later on, we're going to speak about industries, we're going to speak about segments, and we're going to speak about companies. So when we come to market segmentation, please be aware of functional benchmarking, because we're going to speak about your companies, your segments, and your industry. And then you also got your generic benchmarking, where this rather compares individual processes. Now, what I've done is also I've compiled a short summary of the benefits and challenges of benchmarking. Now, if you look at, let's take competitive. One of the main benefits is that you'll get a better understanding of a competitor, and you're comparing similar processes. Now, for example, if you looking at a company, let's say Vodacom and MTN and Cell C, they involved in the mobile business. They're involved in the cell phone business. So they, Vodacom, can get a better understanding of MTN and Cell C, and they can basically compare similar processes. However, one of the challenges is that this competitive benefit might be limited because of the IP issues. What is IP? Intellectual property. So guys, before you engage with benchmarking, make sure that you don't infringe on regulations. We spoke earlier about the RACSI model. The first item on there was regulatory approval. So it's important that you get regulatory approval in terms of engaging with benchmarking. Make sure you also have your buy-in of your management board, because you can see there are benefits, however, there are also challenges. So you as a procurement manager, involve your marketing team. They understand the market more than you do. They know how to do market analysis. They know what are the different market segmentations. They know what is the target market. Please don't do benchmarking in isolation. And then if you look at your generic, the benefits is it fosters innovation. It's non-threatening. However, the challenge there is that it can be difficult to identify best in class, and it can be a difficult concept to understand for some people. So again, my tip is, before you engage in benchmarking, make sure that you get your buy-in from all the internal stakeholders. So once you completed your benchmarking, we're going to move on to a next subject, which is basically called how procurement uses financial budgets to control the spend. Now, again, early on we spoke about procurement budgets, guys. Your procurement budget rolls into the financial budgets. So now we just want to give you some information on the purpose of financial budgets. What is the difference in terms of cash flows? Now, when I did a business case for SME, they asked me the question. They said, Roy, based on the income statement, we got a 3 million rand PBT, profit before tax. The question they asked me is, if I got a 3 million rand profit, how come my cash flow is negative? Now, you as a procurement manager need to understand the difference between income statement and a cash flow statement. In terms of the financial requirements, in terms of a listed company, you need to basically supply all three documents: your income statement, your balance sheet, and your cash flow statement. So what we'll do is we'll go through the income statement, the financial budget. What is the purpose of a financial budget? The purpose is how to raise income and how to spend it. So the same, you can relate it to a family. You basically earn an income. Let's say your salary is, let's say, 50,000 rand a month. Your deductions is 10,000, so your net income is 40,000 rand. You need to look at your expenses, and if your expenses are basically 38,000, you basically have a surplus of 2,000 rand. Now the same principle applies in terms of the company. You basically need to know what is your income and what is your expenses. Now the financial manager will engage with the procurement manager. Why? Because normally the average spend of a manufacturing company, 70% of the spend comes from the purchasing department. So your role is quite crucial in your company. So you need to understand the complexities of the purchasing management department. Now, I basically identified three main activities that are involved in budgeting. Number one is planning, controlling, and decision making. Now, guys, we all know the importance of planning. If you don't plan, you're going to fail. Once you have your financial budget, you actually need to control your expenses. Now, what I did was, when I compiled budgets, I basically compiled my budgets quarterly. So if the revenue was 1 billion rand, what I didn't do is I didn't use a linear scale. I put a concerted effort into the budget to make sure when the revenue will occur in which quarter. So maybe in the first quarter, I got 30% of the revenue, second quarter, 25%, the third quarter, 20%, and the last quarter, I got the balance. So you have to do it holistically. Also, in terms of decision making, budgets help you to make effective decisions. We spoke earlier on about the business case. So budgets and business cases will help the board to make effective decisions. So those are the three main activities. Again, what is the difference between a financial budget and a cash flow? You need to know those differences. You need to know why an item may have a different value in the profit and loss account from that in the cash flow statement. So for example, if you look at depreciation in the income statement, you basically have depreciation. So we all know what depreciation is. So if you buy an asset of, let's say you buy a car, a company vehicle, the company car costs 500,000 Rand. Depreciation, let's say it comes to 100,000 Rand per annum. That 100,000 Rand per annum is an expense. You show it in your income as an expense. However, the depreciation is not a physical outlay of the 100,000 Rand. So just bear that in mind when you consider depreciation and amortization. You also know what is a zero-based budgets. Now, each year, our government presents a budget. They do this in February, March period. Now, my philosophy is that our government should engage with a zero-based budgets, because even in companies, what they do is they look at the previous years, they look at the previous expenses, and then what they do is they basically add a percentage. So let's take an example, salaries. You got a staff of, let's say, 500, and when you do budgeting, as a quick and easy, lazy way, you basically add on 7% as an increase. Now, when I did budgeting, I basically used a zero-based budgets. It involves much more work. Well, believe me, I spent nights burning midnight oil doing zero-based budgets. But in the end, although it's more time-consuming, it's definitely more effective than doing conventional budgets. So in terms of procurement, guys, as a tip, perform a zero-based budgets instead of traditional budgeting. Then you also need to know your vision statement, your mission statement. You also need to know what's an accrual. You also need to how to handle variances in terms of price and quantity, in terms of labor, and in terms of your overhead variances. Just as a summary, your financial budgets, you need to basically plan, you need to do, and you need to review. So normally a budget is done for a period of a year. However, you basically can compile a forecast, and your forecast is basically done monthly. So if your budget is basically R1 billion, you divide that R1 billion into a normal forecast, and each month you basically compare your actual versus your forecast. And ultimately, you do this to improve the financial performance of the company. Now, again, although it's called a financial budget, the procurement manager has quite a huge input in terms of the financial budgets. So it's important that this is done holistically and is done with all the key players. Now, one of the important things I mentioned early on is about the difference between cash flow and income statement. Now, as I said, you might have 3 million Rand profit, but if you look at your bank statement, you got an overdraft of R1 million. So the question I was asked is, why do you have 3 million Rand as profit and loss, and why you got a negative bank balance? Now, cash flows, guys, believe me, that's one of the main reasons why companies cease to exist. It's not because of profits, it's mostly because of cash flow. Now, in order to manage your cash flow. There's 6 steps of cash flow management cycle, especially in a manufacturing company. As I said, I was involved in a large manufacturing company, so I'm speaking from experience. Now, what's important is I've also mentioned I was involved with the project for 3 years. One project that lasted 3 years. Now, in that project, you basically need to calculate your cash flow. You need to calculate what is the end result going to be. Now, if you're involved with the project, you basically procure raw materials from your supplier, which means that if a supplier gives you a 30-day period, if you basically order materials on the 1st of July, by the end of July, you order materials for R1 million. By the end of July, you basically have to pay your suppliers. Now, you're only going to get your money later based on the payment terms which you have with your supplier. It might be 6 months, it might be 8 months, it might be a year. So it's important to manage your cash flow. Also, you need to manufacture your products. Once they're manufactured, you need to store the products in your warehouses or in your stores. Then you need to pay your foreign suppliers. Some foreign suppliers, in terms of a irrevocable letter of credit, it means you also need to understand your payment terms with your suppliers in terms of LCs, letter of credits. You get different types of letter of credits, but we won't delve into that now. But it's important. Some foreign suppliers insist on an irrevocable letter of credit. And then eventually you sell the products, and a month later you basically receive your funds from your clients. Now, in terms of this period, you basically got cash outflows, and you need to manage your cash inflows. Your cash flow needs to be done not on a monthly basis, not on a weekly basis, but on a daily basis, especially if it's a large company. You do have scenarios where you don't pay suppliers, and what happens is, if you don't pay suppliers, they get worried, and what happens is they go to the courts of law, and then obviously there's litigation. And guys, believe me, litigation is extremely expensive. So please manage your cash flow effectively. And then here's various advantages which you can read through later on. How to look at your advantages. It all got to do with efficiency and effectiveness, communication, coordination, performance appraisal, and also how to manage your time. As I said, procurement managers focus on strategic issues, and all the routine activities, you can assign that to a buyer or a junior person. So you need to understand the advantages of budgeting. Now, also in terms of a project, you have a project. A project will basically involve your plan baseline, and as the project progress, you need to do a comparison between your actual cost and your planned cost. The difference between your two is basically called your variance. Now, as a procurement manager or as a project manager, you need to understand the planned cost, because in this example I'm giving you here, you're basically looking at your actual cost and your planned cost. Now, what this does is you need to take into account your expected cost. This might be a period of end of the June. So at the end of June, when you do your monthly reporting in your management review meeting, you go there and you say, guys, we're doing quite well. Our actual cost is 100 million. Our planned cost is 120 million. So the variance is 20 million. However, this can be misleading. Why? Because you haven't taken into account your expected cost. So what you do as a procurement manager, you present two graphs. You present the one I'm showing you now, and then you present the second graph that shows the effect of the expected planned cost. Now, again, in the months of July, August, you might be expecting a huge bill from your foreign supplier of 3 million euros. So what you do is, in the month of September, you show on the graph the effect of the 3 million euros. So you present both graphs to your management. And then also with the project, this is known basically as a ironclad diagram. Why? Because it basically shows you the three main activities: your scope, your cost, and your schedule. So your schedule got to do with your time. Your scope got to do with your specifications. Again, as I said, specifications is extremely important. So when you look at your scope, make sure that not only you, but all the parties understand specifications, guys. Whether it's a performance specification, whether it's a conformance specification, or whether it's a technical specification, make sure everybody understands the specifications. And again, cost plays a vital part. And in the end, you basically, the aim is to offer a quality product or a quality service to your end customer. Why? Because you actually need to get the revenue, you need to get the profit, and you actually need to get future contracts. If you got a project and you perform badly, what will happen? Your reputation is in tatters. Word of mouth. Company A was supposed to deliver a project within 3 years. It's supposed to cost R1 billion, and in the end, the project cost R2 billion. So there goes your reputation. So if you can perform satisfactorily, you will, believe me, you will get future business, which can basically sustain your company. Chapter 2. Again, you need to understand the supply chain management process. Now, you can see the source was basically a CIPS 2020, and you need to understand this diagram, because why? It speaks about the role in procurement, it speaks about operations management, and it speaks about the end consumer. Now, you're all familiar with downstream and upstream, and you're all familiar with supply and demand. So this is quite a good summary, because it tells you exactly what is your role as a procurement manager in terms of supply chain management. So in terms of procurement, you can see what happens. We spoke about raw materials, inbound logistics, goods in warehouse, manufacturing, outbound warehouse. This diagram also speaks about WIP, work in progress. Work in progress is an asset. It's a part of your current assets. And if it's not managed effectively, work in progress will come back to bite you. So as a procurement manager, guys, please manage your work in progress. So in terms of the downstream, you need to know exactly what is the effect of the downstream, as well as the effect of the upstream in terms of supply and demand. This is quite a useful diagram that can help you to analyze the market. The second sketch, also extracted from CIPS. This is a document which you can basically print and put it in your office to make sure what is the effect of the supply chain management on quality. The emphasis is here on quality. The previous diagram I showed you, the emphasis is also on quality. You need to supply a quality product at a reasonable price to the end customer. If you don't do that, you will be out of business. So this is quite a useful diagram to enforce the importance of quality. There are different guidelines, there are different systems that can assist you. As I mentioned, you need to have a sophisticated ERP system, and I mentioned there's quite a good system in the market. Oracle, there's SAP, Microsoft Dynamics, whatever ERP system your company is using, make sure that it's there to render a purpose, and that purpose is basically to supply a quality product to the end customer. And again, you got different stakeholders. You got your procurement team, you got your operations, you got your inbound logistics, you got your outbound logistics, you got your warehouse team, you got your sales manager, you got your forecasting team, you got your chief operating officer, you got your chief executive officer. Guys, this is a team effort to make sure that the supply chain management is effectively done. And in the end, we want to show transparency and we want to show traceability. Early on, I mentioned there is three levels of market analysis. Before we go there, are there any burning questions that anyone want to ask in terms of what we covered, or in terms of a question that you might have? I see there's a person who raised their hand. Go ahead and ask the question or comment.
Hello. Okay, how do you analyze the market?
How do you analyze the market? Okay,
Yeah.
that's what we're gonna do now. We basically gonna analyze the market. So,
Okay.
as I said, when you analyze the market, make sure that you engage with your marketing team. They are trained, they got the expertise, they got the experience to lead you as a procurement manager to do a market analysis. Now, before you do a market analysis, you need to know three things. You need to know the industry, you need to know the company, and you need to know the segment. These are three vital terms that you need to understand before you can do a market analysis. So, in order to do a market analysis, you first need to understand the industry, right? So, an industry is a group of companies within a sector offering products that are close substitutes for each other. So, let's use an example again of the semiconductor industry. In the semiconductor industry, you basically have different industry classifications. So you basically have the logic, LOGIC. You basically have the communication. You basically have different types of industries within the semiconductor industry. Now, fortunately, we have a system called SIC. This acronym stands for Standard Industrial Classification. Now, with this it's basically a system for classifying industries by a 4-digit code. Now, in order to do your market analysis, you need to determine in which industry you are. That's extremely important. Now, here it's a 4-digit code. It was established in the USA in 1937. 50 years later, it was updated, which is 1987, and it is used by various procurement practitioners, used by various market analysis to see in which industry do you fit. So, for example, what I did was, you can go into the database on the internet. If you take, for example, agriculture, you will see there is major groups. Group 1, agriculture, production crops. Group 7, agricultural services. Group 8, forestry. Group 9, fishing. So what you can do, guys, go into the standard industrial classification and you'll see exactly in which organization, in which industry that you basically part of. There is a link in the study guide. Use the link and make sure that you understand where this fits in. I see there's another person who actually raised their hand.
Oh, thanks, Roy. I just wanted to ask, so what you just said now, it's a way that we should use it in terms of studying, going to links for more details. Because when you went through the past chapter, when I look at risk assessment in the textbook, it's like 4 to 5 lines. But because you had the experience, you were able to explain it in details for us to understand. So is it advisable to do further research on topics that are highlighted?
Yes. In the study guide, they give you different references. So after each chapter, they give you references, right? They give you different links. So Samuel, it's important that you actually do get additional information which can help you to understand the terminology, because in this module, there's lots of terminology and you do need to understand all the different terms before you actually write the exam, because in the multiple questions, they'll basically use a term, and if you're not sure of the term, you might take a guess, and you might take the wrong guess. So again, my tip is, as I said in the beginning, make sure you understand all the terminology. So when they ask you the questions, you basically understand the way they're asking the questions. But thanks, Samuel, for that. Okay, any other questions? Okay, so guys, once you understand the industry, you need to look at the 3 generic strategies. In the study notes, they've also mentioned the different generic strategies. Now, again, as you can see, cost is paramount. Without your cost, you cannot determine your selling price. Without the cost, you're not sure whether your selling price is too high or your selling price is too low. So in terms of cost leadership, one of the strategies is to be the most competitive company in cost in the entire market. How can we do this? We got basically tools to assist you. As I said, target costing is extremely important. TCO is extremely important. So use that in terms of cost focus. Also, in terms of differentiation, you want to be a distinctive company, recognized for quality and uniqueness. As I said earlier on, the project which we did, it was a successful project. It was a high quality project. The customer was extremely pleased with the project, and because of that successful project, we received numerous other contracts in terms of turnkey projects. So it's important to be a distinctive company. And also, guys, what's important is don't chase every opportunity. That's extremely important. The aim of your company is to make sure that you achieve your budget revenue and your budget EBIT. There's various opportunities out there in the market, but please be selective in your opportunities. So you basically have to have a strategy in order to be different, in order to understand the market analysis. So if, for example, if you want to be a cost leadership, you have to be cost effective and you have to be cost efficiency. You have to have a competitive manufacturing process that's reasonable. If you want to involve in differentiation, you need to have a competitive advantage. And if you want to follow a niche market, again, there you target a small market rather than the entire market. Now, as I said, your marketing team will definitely assist you in how to do that. Once you understand the industry, your next focus on market analysis is to understand the segment. So what's important, or what is a segment? A segment is a group of products that provides specific but different value for the buyers. Each market segment is unique. Now, again, please remember that market segmentation is the process of separating, identifying, and evaluating the layers of market in order to identify a target market. This is extremely useful when doing your market analysis. And remember, there's 4 types of segments. Product-based segments, a segment based on buyers, a segment based on a distribution channel, and segment based on geography. Now, also on page 65 of your notes, it gives you quite a lot of information on product-based segment. What's important there, that you need to know that you got different price levels, you got different discounts, different features, different designs, different packaging, different performance. So if you want to buy a new vehicle, what's important is you need to look at, first of all, the price, the features. You need to look at the performance, the torque, the output of the engine, and the rest per minute. And then besides the actual product, guys, you need to consider the warranty and the insurance. So look at it holistically in terms of a product-based segment. Also buyers. So when you look at buyers, it's as difficult as segmenting consumer markets. It is much simpler and easier than segmenting industrial markets. Why? Because the same industrial product have multiple applications. We all know customers differ greatly, and it's also difficult to discern which differences are important and which are trivial for developing market strategy. So you need to know exactly the segments based on buyers. The third segment is based on your distribution channel. Now, again, in terms of your market analysis, you need to know whether it will be a direct channel, a retail channel, a wholesale channel, or agent channel. If it's a direct, it's directly from the producer to the consumer. If it's retail, you basically got your producers, you got your retailers, and you got your consumers. If it's agent channels, then you'll basically have your producer, your agent, your wholesaler, your reseller, and your consumer. Now, for your environment, for the company that you work for, you need to know exactly how is your segmentation based on which distribution channel. However, if it's based on a retail channel, have a meeting with your marketing team and make sure if you can basically improve on your distribution channel. One avenue might be, instead of a retail channel, it might be an agent channel, or it might be a wholesale channel. You only know this after engaging with the various stakeholders. And again, segments based on geography. As I said, when I was based in Germany, I had different suppliers based all over the world. Most of my supplies was based in China, Taiwan, South Korea. Why is it important? Because, as I said earlier, there's different challenges, there's different risk. So again, I've alluded to earlier on, location, a time zone. I had a problem with the time zone. I had a problem with a language. So all these problems you need to overcome to be successful in your job. So please, when you do market analysis, look at your segments based on geography. Now, once you do this, the next step is to look at the famous Porter's 5 sources. And again, this Porter's 5 sources, it appears in every exam. So I see I got a message here from Ellen. Ellen is saying here, Roy, please be so kind and share your slides with us after the revision class. She's busy at work and she's been distracted. What Ellen, like I said, Sauri and her team will send this presentation to all the participants. So that shouldn't be a problem in terms of these slides. Okay, so guys, as I said, there are 8 modules for your CIPS diploma. Make sure you understand the Porter's 5 sources because it's useful not only for this exam, but in your other exams as well. I basically facilitated various courses, and most of the courses, they speak about the Porter's 5 sources. Now, as you can see from the sketch, you basically got your rivalry among your existing competitors, you got your potential entrants, you got your buyers, you got your substitutes, and you got your suppliers. This is extremely important. My next slide basically expands on this here. So for information, if you can basically print these 2 slides, it's very useful because instead of reading 50 pages of the Porter's model, you can use these 2 slides. And these 2 slides is a good summary. So in the middle, you will see there a rivalry among existing competitors. That is basically the center. And then you basically got your 4 factors. Those are threat of new entrants, bargaining power of suppliers, your threat of substitutes, and then the bargaining power of your buyers. I see someone raise their hand. Do you want to ask any question there?
Yes, I would like to. Roy, I don't know, is it possible for you to sort of explain the gist of Porter's 5 forces? Because I don't know, I struggle to sort of put them all together and just get the gist of it. I think this diagram that you've given us is a lot better than the one that's in the study guide, firstly. So thank you for that. I think it's going to help us a lot. But could you please just explain it just a little bit more so that I can sort of connect the dots? Because like I said, the first diagram that we have in our books, it really just tells a person not much, and it becomes a bit difficult to understand.
Yes, no problem. Thanks for that. Okay, guys, just remember where we are. We basically are doing a market analysis. Again, just to recap, you need to understand your industry and you need to understand your segment. Now, the Porter's model focus on market segmentation. Now, I've used this model in my career, and it's quite a useful model because, especially when you're involved with a project that's basically worth R1 billion, and with a project, you basically have to interact with different suppliers, you have to interact with different buyers, and also you busy with the project. I spoke earlier about IP, intellectual property. So you need to be aware of all these factors. Now, if you look at the first factor, if you basically a supplier, if you basically supplying projects to a client, you will notice there is various competition. All companies have competitors. Now, the first thing is you need to be aware of your competitors. Why? Because in the end, each company want to basically increase their market share. So you will have a rivalry among existing competitors. And believe me, there are numerous competitors out there. So what we done is we basically had to first of all, identify the number of competitors. In our industry, we basically had 5 major competitors. Then we need to see exactly what is their industry concentration. Customers go after brand loyalty. They go after brand names. So I mean, think of Coca-Cola, Microsoft, Apple. Those are all expensive brands. And then also, what's important is switching cost. This is actually very important. A switching cost is basically when you want to engage with a new supplier or a new product. Now, if you have a customer, please look after your customer. So make use of switching cost. Make sure that your customer is aligned to you and your customer will not go to a different competitor. So that's quite extremely important to look at your existing competitors. Early on, we spoke about different benchmarking. One of the benchmarking was basically competitive benchmarking. Now, competitive benchmarking is quite useful in this exercise, but like I said, engage with your board of directors before you engage with competitive benchmarking. Also, in terms of a new entrance, the market is only that small. The cake is only that big. Your market share might be 25%, which is basically a quarter of the business activity in your industry. You need to look after your market share. You need to expand your market share. So therefore, please be aware of the threat of new entrants. Some of them will basically come in there because of their experience. Some of them will come in there because of they got connections with governments. So please be aware of the threat of new entrants. If you look at buyers, there are quite a number of customers out there, but please, guys, be selective. As I said earlier on, do not chase every opportunity. Be price sensitivity. Know the buyers. Again, look at your switching cost. I've got a hand raised there. Do you want to ask a question? Is that Simone?
Sorry, Roy, no, you can go on. No, it's fine. Thank you.
Oh, okay. Guys, it's important to look at your suppliers and then also the threat of substitute products. Now, in an industry environment, as I said, you basically got a project-related basis. You basically manufacture products. Now, we did both. We were involved in the project business and we manufactured products. So what's important is you will basically have some competitors who basically want to substitute your product for their product. Now, also, if you take, for example, I was watching the Euro 2020, for example. You basically have a player on the field, and later on, because he's tired or because he's injured, they basically substitute him. They bring on a new player. Now, this can also happen in your business, where you have a product, and in the end, your customer substitute your product against your competitor's product. Now, this is quite dangerous because if a customer does that, you're basically going to lose market share. So it's important basically to look at the buyer propensity to substitutes. You also need to look at the relative price performance of substitutes. And again, guys, a switching cost is very important. So as a summary, this Porter model helps you basically to, first of all, to sustain your business. It also helps you to grow your business. It also helps you to be aware of your competitors. It also helps you to be aware of substitutes. Now, we all know that the Chinese is very successful in substituting your products. Take, for example, the solar business. a real classic example in Germany. When I was there were various German companies who were leaders in the solar business. What happened? We had the Chinese coming in, and because of the pricing, as I said, the propensity, the buyer's propensity to substitute. What happened? After a couple of years, the Chinese gained control of the solar business. So you can one day you can have a well-established business with a huge market share. In the next few years, you're going to lose that to your competitors. So please be aware of this supporters model. It's a useful model. It can help you to guide in your business, and also it can also help you in your PLC. What is your PLC? Your PLC is basically your product life cycle. So Zendili, you got your hand raised.
Yes, Ray. Can you clearly differentiate between the rivalry among existing competitors and the threat of a substitute product?
Okay, what I said earlier on, let's take an example. A rivalry among existing competitors. Now, today, in the aerospace industry, you basically got two main manufacturers of aircraft. You basically got Boeing, and you basically got Airbus. If you look at their market share, it's roughly 50-50%. So Airbus is basically a European manufacturer, and Boeing is a US manufacturer. So for the past 30 years, we basically had a rivalry between existing competitors. We had a competitive rivalry between Boeing and Airbus. In the 1 year, Boeing's market share was 55%. In the following year, it was 45%. But for the past 30 to 50 years, we only had two existing competitors. Now, Sendili, the threat of substitute products. Recently, the industry has noticed that China is offering a substitute, a plane to compete with a Boeing 737, with a Max 737, as well as with a Airbus. Now, again, as I said, for the past couple of years, we only had these two major competitors, and now since 2 years ago, we basically have the threat of a substitute product. Now, if the Chinese are successful with their substitute products, what it will mean is that they will basically gain market share at the expense of Boeing and Airbus. So the market share will actually decrease proportionately, and the market share of the Chinese plane maker will basically increase. So that's why Boeing and Airbus, in the past, they basically had disputes regarding subsidies from the various governments. What they have decided now is to put away the differences, focused on building quality aircraft to eliminate the threat of substitute products. So that's an example of the two, Sandili. Does that answer your question?
Yes, it does. Thank you.
You're welcome. And as I said, this portal model can also help you to understand the PLC. Now, again, the PLC is a product life cycle. So for companies that manufacture products, you basically got 4 stages. You got your introduction phase, you got your growth phase, you got your mature phase, and you got your decline phase. Now, again, in order to understand this, let's use a classic example. Let's use an example of the Nokia phone. The Nokia phone was introduced. We all know, we all had Nokia phones. And then Nokia experienced growth, and then they experienced maturity. And what happened to Nokia? We're speaking about the threat of substitutes. In terms of the phone, it was substituted by the iPhone. And we all know what happened to the product life cycle of the Nokia phone. It matured and then it declined, and then it became extremely difficult for Nokia to operate. So again, guys, you can be a market leader today. You're not sure what's happening in the next 3 years. So Nokia went from a hero to a zero. Their market was taken over by Apple in terms of the iPhone, Samsung. They became the new market leaders. So it's important in your industry to look at your revenue and your profit and also the time scale lines. So again, look at where you are in introduction phase. Just remember, in the introduction phase, lots of cost is involved. Why? Because of research and development, marketing costs, and distribution. If you look at your growth phase, this is where your product starts to sell. The public is aware of your product, and word of mouth is starting to spread. Now, here is basically the early adopters. If you look at your maturity phase, this is basically when you're making your most profit, because you're now at the mature stage of the market where your profit per product is extremely high in terms of your profitability. Then you look at your declining phase where your revenue decreases, your profit decreases, and you need to make a decision. So you need to make a decision whether you continue with the product, or to make significant changes to the product, or to move on to another product altogether. Take, for example, a classic example is again LG. We all know they were also in the cell phone business. They also had a phone, but unfortunately, their cell phone was in the decline market, and what they done was they basically exited the cell phone business because it wasn't competitive. So in your industry, I'm not sure which industry you're working at, but guys, please make sure that you use the Porter's model and you use the PLC to identify in which stage is your company. I see there was a hand raised. Okay, so it's important to understand the time frame. Now, also, all what we're speaking about now, guys, it's all got to do with the market analysis and the market segmentation. So the question is, how do you collate sources of information to estimate the breakdown of cost? Now, here's various information which can be used to get information. You, as a product manager or a procurement manager, you need to use the following. So what you can do is you can use the market analysis, you can use the company annual financial statements using the line of best fit, you can use market data, you can use the technical data, you can use a request for information, you can engage with supplier visits, and there it's actually very beneficial. What I did was I visited numerous suppliers, both local suppliers, regional suppliers, overseas suppliers. This is very important because you gain a wealth of information by visiting suppliers. My knowledge increased exponentially when I visited suppliers. Why? Because they showed me their workshops. I engaged with their staff. I basically asked probing questions. I got to know the team members. They showed me their processes. They showed me what type of manufacturing processes they use. So it was extremely informative. It was extremely interesting. So again, a tip, guys, is visit your suppliers. It's very beneficial to do that. And again, once break even is reached, once you're comfortable in the mature stage, you can basically consider offering discounts to increase market share. Also in the books, in the study guide, they give you quite information on how to own it. Again, own it is an acronym. So what it means is it's the outline, wide research, narrow research, increase your stockpile of information, and how to basically transform your stockpile into new knowledge. One of the ways you can basically own it is to engage with suppliers. That's the way basically what I did. It was a very beneficial methodology for me to basically own it. So guys, please use these guidelines in your work environment to own it. Chapter 3. Again, I've explained to you the scope. You need to understand the scope. You need to understand specifications. What is a specification? A specification is a statement of needs to be satisfied by the procurement of external resources. It's a statement of the attributes of a product. It's a statement of requirements. The course that you actually study now is basically defining business needs. So therefore, it's a statement of requirements. It's a statement of defining business needs. What is the purpose? The purpose of a specification is to communicate the requirements of the purchaser to the supplier accurately. Note the emphasis is on accuracy. If you supply a specification that's inaccurate, your project will fail. Again, the 3-year project which I was involved with, we spent days and weeks looking at specifications, guys, because make sure it's 100% correct, not 90% correct, not 95% correct, but make sure it's 100% correct. Because if it's not correct, believe me, it will come back to bite you. So therefore, compare what is actually supplied with requirements in terms of purpose, quality, and performance. Now, earlier on, I said there are 3 types of specifications. The first one is performance, conformance, and technical. Now, it's important when you look at performance specifications, there's 3 types of performance: outcome specifications, output specifications, and statement of works. Now, again, guys, please make sure you understand the difference between outcome specifications and output specification and statement of work. It's a lot of theory, but please make sure you understand specifications. It will help you to pass the exam. It will help you in your work environment as well. Now, again, what statement of works? You get 3 types of statement of works. You get your design statement of work, you get your unit rate, and you get your performance based. Now, in practice, believe me, you are going to use all these specifications. You're going to use a performance specification, you're going to use a conformance specification, and you will use a technical specification. Now, as the word conformance, what does conformance means? It means that you have to conform. There are no deviations. It has to be 100% correct. You either conform or you don't conform. If you don't conform, you're going to lose money. You're going to lose reputation. Again, you need to understand the difference between performance and conformance. Now, what I've done is you need to understand what is performance. So performance specification describes the outputs and it describes the outcomes that are expected. And here, guys, what remember, the supplier bears the technical risk. So before you engage with specifications, make sure what type of specification are you engaging with. Performance, conformance, or technical. If you look at conformance specifications, what's important here is that conformance specification provides in-depth detail for functional and non-functional requirements. Now, again, although you're not technical, although you're not an engineer, please familiarize yourself with these different types of specifications. You don't have to understand all the technical information. And if you see some specifications, they got formulas in there that you will not understand. But your job is not to understand technical formulas. Your job is just to get an overview of specifications. Now, also, you as a procurement manager will basically be part of a group that writes design specifications. Now, that document, you have various authors. You basically have a professional engineer, you have a technical guy who understands all the technical parts of the contract, you basically have a product expert, and then you also have a procurement manager. You are going to be part of writing a specification. You also can have your marketing team there. So remember, specifications are not done in isolation, but is done in form of a team collaboration methodology. Now, again, we spoke about market segmentation. You need to agree on the target market for the product. There, you need to have your marketing specialist in there. Determine specific market needs. The marketing manager will basically guide you. In terms of quantity to be sold, they speak about cost. You will need to engage with your costing clerk, your costing manager, and your financial manager. What about competition? What about protection of intellectual property? There you need to engage with your contract manager and you need to engage with external lawyers. If you don't have an in-house legal expert, you have to engage with your external legal team in terms of intellectual property. You can basically use patents. Then you also need to look at health and safety issues. You also need to look at the ergonomics of products, how machinery interacts with personnel. So again, guys, you need all the help you can do in order to write a design specification. Now, in terms of outcome specifications, going back to the diagram here, we're looking basically at this outcome specification here. This is what I'm going to refer to now. So in terms of your outcome specification, you need to look at the specific capabilities from suppliers. So in terms of your outcome, you need your output. Now, how do you measure productivity? Your productivity is a ratio between your outputs and your inputs. So in terms of your inputs, you can measure the supplier's capability. What are the inputs that you can use? You can use the ability of the supplier. You can use the knowledge of the supplier, the experience. Earlier on, I mentioned that I engaged in numerous supplier visits. From those supplier visits, I could basically engage to see whether the supplier is capable in terms of his technical ability, in terms of his knowledge. And I was fortunate because those suppliers, they basically had years of expertise and years of experience. They were very skillful. They also introduced me to updated technology. Now, guys, if you sit in your office as a procurement manager, believe me, you will not be exposed to understanding how to design a specification. There's also models that can be used for identifying the business requirement, the BRD. Again, this is the 5 W's and the 1 H. So you can basically either engage with your internal stakeholders, and you can either engage with your external stakeholders. So again, who do you ask? What do you ask? How do you ask? Where? When? Why? It's important when you ask questions to ask open-ended questions, closed questions, as well as probing questions. You need to understand if it's an open problem or a closed problem. You need to understand the mechanics in terms of how it operates. So this, again, is a useful tool that you can use in your procurement environment. Guys, these tools which we're sharing here is actually been proven. The Porter's model, the industry classification, the histogram, the Pareto analysis, the BRD, the Kralik model. All these tools are there for you to use. But again, make sure to use the correct tool for the correct function. Don't use the incorrect tool because you'll basically get incorrect results. Now, in terms of specifications, what is the purpose of a good specification? You need to accurately, again, the word accurately, guys, 100%. You need to accurately and effectively communicate what you want your supplier to do, to achieve, and to provide. To quantify this want, you need to measure milestones, the achievement of quality standards, and ultimately whether the relationship has been a success or a failure. Again, your project can be a success if you engage constructively with correct stakeholders. Your project can be a success if you use the correct tools. You can also use the PERT. You can basically use the histogram. You can use Pareto analysis. You can use the Porter's model. All those tools are there. That's been proven. So you can use. Now, remember, outcomes. Although outcomes are the heart of a good specification, there are 3 major difficulties with that. Now, the first difficulty is how do you measure an outcome? With outcomes, there's a long delay between a supplier taking action under the specification terms and the achievement of the result. As I said, guys, you basically engaging with suppliers based in China, in South Korea, in Taiwan, in Germany. There will be a delay. You need to handle that delay. More than one output can affect an outcome, and not all of these may be in the scope of the supplier who is awarded the outcome-based contract. So please be aware of the different outputs and the outcomes in terms of the scope of supply. It is recommended that the output specification is used and you assume that the outputs will deliver the outcome, even if the outcome is not formally measured. Now, again, it's difficult to measure an outcome. I gave you some recommendations there. Also, the output and the outcome specification can be supported by a statement of works, a SOW. Now, again, what is a statement of work? A statement of work, it is a detailed description of the specific task or service a contractor must perform under the terms of the contract. So you need to be familiar with the terms of the contract. in the terms of the contract, they basically got contents of the contract. As the procurement manager, guys, you need to understand what is the contents of the contract. Otherwise, you will not understand the specifications. You will not understand the statement of work, and ultimately, the project is going to fail because you, as a project manager, did not understand all the commercial terms and conditions in the contract. Some contracts can be 100 pages, 200 pages. What's important for you to do is to go through the contract, to understand what part of the contract relates to you as a procurement manager in terms of engaging with suppliers, in terms of identifying risk, in terms of mitigating risk, in terms to make sure that the supplier is paid on time. Your job is to make sure that there's the availability of stock, because if stock is not available, your production will cause a bottleneck and your company is going to lose millions because you, as the procurement manager, did not do your job effectively. So therefore, you also need to understand the SOW. Now, there's three types of SOW. The design SOW, a level of labor materials, and performance-based. Again, you as a procurement manager need to understand what types of SOW is mentioned in the contract. If it's time and material, it's basically short-term contracts. However, there is a risk in terms of a T&M, because why? As I said, a project has a start date and an end date. I see there was a hand raised here. Anybody want to comment or ask a question? The hand went up and it went down again. Now, guys, in the contract, please, when you have the kickoff meeting or whether you have Kikana, your hand is raised. You want to ask a question, Kikana? Okay, maybe Kikana has connectivity issues. When you discuss contracts, I came across procurement staff who said it's not their job to understand specifications. It's not their job to understand the scope of work. It's not their job to understand the SOW. That procurement manager, obviously, he had a career, moves in terms of the company. Please, as a procurement manager or procurement specialist, please be involved in all these activities which I have discussed earlier on. So, what are the contents of a statement of work? Again, the purpose of the project, the scope, the milestones, the specific outputs, payment schedules. Again, it affects procurement managers. So don't say you're not involved in a scope of work. You are definitely involved in the SOW. Now, you certain tools that can basically help you. Someone's hand is raised again there. If you want to ask the question. Unmute yourself and ask the question. You raised your hand.
Hello, Roy. I did type in the comments in the chat box, but I will just ask you here. A statement of work is not relevant necessarily to all supplier contracts. Am I right?
Yes, you're 100% correct. Because as I said, in a company, you basically have projects, you manufacture products, and you offer a service. So the SOW is not relevant to all supplier contracts, because early on we spoke about different types of contracts. You basically got your routine suppliers, you basically got your modify, and you got your new purchases. So obviously, in terms of the routine contracts, you basically not have SOW. So that answers your question, Susan.
Yes, thank you, Roy.
Okay. Thanks, Susan, for that question. Also, guys, that's quite a good question because specifications and statement of work, it's all involved in your major contracts. And that's where all the money is. That's where the highest business volume is. So please, if it is major contracts, get yourself involved and understanding the different terms and conditions. Now, again, you have different tools and you have different methodologies that can assist you with a specification. So again, you got standard, you got the internet, you got the suppliers, and you got the directories. Now, just to recap, guys, we all know the power of the internet, the power of Google. Again, please exercise extreme caution when using the internet. I spoke earlier about technical specifications. Don't get bogged down between technical formulas and different scales. You might have the arithmetic scale and you might have the log scale. Don't get involved in all those formulas. That's not part of your job, but just know how it works. Also, you can use various suppliers. We spoke about suppliers, regional suppliers, local suppliers, international suppliers. There's also directories that you can get involved on. So there's various options that can assist you in writing a specification. Now, again, how to identify sections of specifications through life contracts. Now, as I said earlier on, I was basically involved with a through life contract. What is a through life contract? A through life contract is basically where you involved. It's like a turnkey project where you involved with the design, the manufacture, the implementation, the commissioning, the decommissioning. That's basically what is known as a through life contract. So then you can also be the 6 components: design, manufacture, installation, support, decommission, and disposal. There are certain benefits of through life management. Again, guys, make sure you understand the difference between acceptance testing and functional testing. There is a difference between the two. For example, if you're busy with a turnkey project and you're busy now with the acceptance testing, you basically involve the client in terms of the acceptance testing. So if you're not sure of the difference, the study guide gives you quite good notes on the difference between acceptance testing and functional testing. Make sure you also understand the 4 stages for identifying and approving changes to a specification. Just to tell you briefly, step number 1 is describe the change. Number 2, review the change, including customers. Look at options. And then once all the changes have been done, you have to have final approval. What I said earlier on, guys, is specifications. Make sure it's accurate. If there are any changes, follow the protocol. Don't do step 1 and then do step 4. Make sure you basically involve your customers in terms of specifications. Because in the end, if you don't involve the customers, and in the end you supply them with a product which they don't want, you are going to be responsible for all those costs. And again, it can be hundreds of thousands, millions of rand, because specifications was not followed, it was not adhered to. And when you have the final approval, make sure it's signed by all the relevant parties. If a project manager signs the final specification, guys, it's incorrect. It has to be checked. It has to be approved. and you have to have all the signatures on the final approval in terms of revised specifications. Now, in terms of this, you need to know the difference between social and the environmental criteria. So, there's two things. You can either create value or you can destroy value. We spoke about value. How can you destroy value? If you submit an inferior product to a customer, if you submit an inferior project to a customer, the project is not done 100% correct. You basically destroying value for your company. And as I said, the ultimate aim is basically to sustain your company, to increase market share. We don't want you to destroy value. With the environment, we basically got something that you need to be aware of. You got natural disasters, you got waste, you got pollution, and you need to look into energy efficiency. Especially nowadays, energy is so expensive. You need to find out what is the most effective way in terms of energy conservation and energy distribution. In terms of the waste, there's 8 types of waste. The book explains all 8 of them. One of the ways you can remember it is by using the word downtime. Downtime is just basically a methodology to enable you to understand the different types of waste. What are the 2 ways in which social and environmental factors can be used by procurement when understanding markets and producing specifications? Again, guys, as I said, in terms of markets and in terms of specifications, you as a procurement manager need to understand it. Please don't say it's not my job. It is your job. So you can identify 3 risks that can result from inadequate specifications. The first one is underspecified need. There's risk involved. What are the risks? Overspecified. What are the risks? Misinterpreted needs. These risks, if it's not managed, it can be a huge problem. Fortunately, there are a process for you to manage risk. So you can basically, you and your team, we spoke earlier on about the likelihood and the impact of risk. So you and your team, you can identify possible risk. You can also look at the potential risk regarding the specifications, guys. Again, the specifications, you need to understand that. You need to assess the risk, the likelihood of eliminating the risk or detecting the risk. In your manual, it speaks about 4 types how to control the risk. You can either tolerate it, you can either treat it, you can transfer it, or you can terminate it. And then you also can monitor the risk. Now, you can use a risk register, and you can also use the RAG status. I'm sure most of you are familiar with the RAG status, where it basically indicates whether it's red, whether it's amber, or whether it's green. So this is also one of the tools to help you as the procurement specialist, how to manage and how to mitigate risk. Now, also, if specifications are done by your colleagues, like I said, guys, your colleagues are basically your technical staff, your engineer, and your project leader. They basically gonna write specifications. Now, what's important is you have 4 reasons why monitoring is important in terms of specifications. Number 1 is basically accountability. You need to determine who's going to be accountable. So you basically got accountability, you got responsibility, and you got authority. Make sure you understand the differences between accountability, authority, and responsibility. Then you need to focus on the goals of specification. Also, once you basically deliver products, once you basically perform projects, there's valuable lessons to be learned. Now, after every successful project, have a product or project review meeting where the agenda is basically lessons learned. And what you do is you actually document these lessons learned, because why? It will basically help new people coming to the organization. This will basically save a valuable time because you don't have to reinvent the wheel. Mistakes in the projects were made. So it's important to identify the mistakes. It's important to identify the risk. And it's important basically to explain to the team how you and your team overcame the risk to prevent someone else from making similar risk. So that is basically extremely valuable. And as a result of this, you'll have better morale and there'll be better improvements. And in the end, this will make sure that you basically have less resignations. The morale will be increased. Profits will be made. Profits will be shared amongst the staff member. Decent increases will be given to staff, because all in the end is basically all a team effort in terms of putting the brains together, in terms of brainstorming, and in terms of benchmarking. Now, again, there's two steps in monitoring the creation of specification by others. You basically have to define the success, which I mentioned earlier on, and then you compile a PID. What is the PID? A PID is a project initiation document. In the study guide, they give you more information on the project initiation document. Again, you need to understand what are the metrics for managing projects, and you also need to understand the steps for monitoring a specification, a writing project. Now, we basically on the last slide, guys. So here we need to identify opportunities to regulate short-term and long-term specifications. Again, in projects, it varies. As I said so many times, the duration of the project varies. So you might have a project that's 3 months, or one project that's 36 months. You need to understand the levels of standardization. So you basically got 3 levels of standardization. Number 1 is the process. Number 2 is the product. And number 3 is the parts. Now, again, with the process, as I said, I was privileged to visit different manufacturers in different parts of the world. So I could basically relate to a job shop, production cells, a flexible manufacturing system, a mixed line, and dedicated lines. My message to you is, guys, go out, meet your suppliers, understand their processes. You'll learn a lot by visiting suppliers and asking questions. Again, with products, there's 2 types of scales, the arithmetic scale and the logarithmic scale. Now, again, why do we use these different types of scales? What is the difference between the 2 types of scales? I'm sure when you were in matric, you basically used logarithm tables. So it's the same principle. You got different types of scales. It all depends on the product, on which scale to use. So make sure that you are familiar with the scales. And then also parts. We spoke about value analysis, and we spoke about value engineering. So then this is the last page of the presentation. Again, lean. What is the purpose of lean? there's manuals about lean manufacturing. In the other courses which I am basically facilitating, it takes about half a day just to explain lean. But for this course, you just need to know what is the purpose of lean. So the purpose is basically to make processes faster and cheaper by eliminating non-value add activities such as waste. As I said, the book mentions about the different types of waste, so you can just read about it. Also, there's 6 concepts regarding lean. It's all in the notes. So just read the 6 concepts. In your function, you will come across a learning curve. What is the learning curve? A learning curve is basically a graphical representation of how unit costs reduce greater number of those units produced. What it means is the more a person performs the task, the better they become. So if you're starting with a project, it will take you 8 hours to do a project. The more you gain knowledge, the more you gain experience, it will take 7 hours, and eventually it will take 6 hours. That's got to do with productivity, the learning curve. Again, guys, you need to know the difference between the two types of scales. Just to give you some basics on the arithmetic scale, the equal distance represents equal numbers. So when you see a graph, you'll see the vertical axis, horizontal axis. So what it means is the distance from the value 1 to 2 is the same as distance 2 to 3 and 3 to 4. That is basically known where it represents equal amounts. However, if you look at a logarithmic scale, what does this tell you? It basically signifies the distance of a point from the scale's 0, which is proportional to the log of that number. Now, we all done logarithmic scales in matric, and also if you went to a technical college, we also had to do these different types of scales. All I want to say is, depending on the function, make sure you use the correct scale. And then the last topic is basically, how does value analysis assist with various competitive strategies? Now, again, we spoke about target cost. I won't go into target cost. We spoke about target cost. Just remember is that you basically, when you do a value analysis, there's basically a process that you need to do. So you need to gather information. You need to perform functional analysis. Make sure you understand the different types of functional analysis. You basically got the primary, secondary, QFD, and the pure analysis. It's all in your study guides. Be creative. There's also an acronym in the book called ORAPA. So evaluate the ORAPA. Make sure you understand what it means. Again, it's all in the study guide. And then you need to make sure that the value analysis team has explored options in terms of how a value analysis can assist you. And also in terms of the value engineering, you can also use the Kano model. In the study guide, it also gives you more information on the Kano model. And again, here is, guys, how to identify stakeholders, how to understand and prioritize stakeholders, and how to implement the plan. Now, when I did this revision exercise, there were actually 40 pages which I had. So what I did was I had to eliminate 10 pages because we only had 3.5 hours. And I see my time has been used already. Now, guys, you will have questions. The idea is basically to collate those questions, and the CIPS team myself included, will be there to basically assist you with the questions that you're going to have before the exam. I see here's a mail here from Faith. Can you email me the presentation? So again, guys, this presentation will be emailed to you from Sauri and her team. There's a couple of questions in the Q&A. Glenda sent a mail here in terms of the RACI. Who is responsible for the specification? So what Glenda, what like I said is, in terms of the RACI, you need to know basically who is responsible, who is accountable, who needs to be communicated to, and who needs to be informed in terms of the RACI. So in terms of specifications, to answer your question, you need to know the nature of the specifications. You also need to know the complexity of the specifications. You need to determine whether it's a performance specification, whether it's a conformance specification, and a technical specification. So based on those three types of specifications, then you will be able to determine who is responsible for specifications. So you just need to understand what specification it is before you can see who is responsible for that specification, Glenda. Guys, that was interesting. I see that we still have 65 participants on the screen. We've only allowed 3.5 hours. So while preparing for your exams, use this study guide which I prepared for you. If you do have any questions, please send it to the CIPS team. There are avenues for your questions to be raised, and we as a CIPS team will try our utmost to answer any questions that you will have. So thank you for your participation, and thank you for the time that you've earmarked, 3.5 hours time. So all I want to do is I want to wish you well for the exams. Please, my tip is, as I said, understand the terminology. It will be useful in your studies. It will be useful in your other modules. And even if you want to decide to advance your career, these are the bases for you to advance your career. Thank you for that.
Thank you, Roy.
You're welcome, and enjoy the rest of the day, and enjoy your preparation for your examination.
Thank you very much. Good day.
Thank you, sir.
Thank you. Enjoy the day, and all the best. And like I said, if you have any questions, raise them in the avenues provided. Okay, I see I have a hand raised there. Altania.
Hello, Roy, nice to meet you. I would like to ask, what is the main difference between total cost of ownership and whole life costing? Because these two terms quite similar. Thank you so much.
Okay, as I mentioned, in terms of TCO, that's basically your total cost, which you basically have to take in from the start of the project to make sure you affect in all the calculations, affect in all the cost, because with TCO, it's basically the accumulation of the cost throughout the lifetime of the project. So if you buy a machine that costs R1 million, you also need to know what is the warranty cost on that, what is the insurance cost on that. So that's basically taking into account all your auxiliary cost. That's your TCO, right? Now, in terms of your whole life costing, what it means there is basically it's a technique to establish the total cost of ownership from production. So the emphasis is on basically your TCO, and whole life cycling cost is basically a technique which is part of the TCO to help you to understand the total cost of ownership. So for example, if you bind this asset, you basically look at a whole life costing to see what is the calculated cost of the repair, the maintenance, and also this asset will only last basically, let's say 5 years. Then you need to consider how to dispose of this asset and how to decommission this asset. Now, it's important to use this technique to make sure that you take into account all sorts of obvious costs and less obvious costs. And also, when you look at whole life costing, you need to look at the planning, you need to look at the preparation, and you need to look at the implementation. Those are the 3 stages when you look at whole life costing. So, Altania, does that answer your question?
Yes, thank you so much. Now it's very clear.
Okay, thanks for that.